Welcome everybody. In today's video I want to talk about a specific metric in the Tesla earnings that got me thinking. As a disclosure, if you're new to the channel, quite a few new members now on the channel. I really welcome that, by the way. Always please smash a like, so it helps the algorithm, gets the video more in front of more people. And if you're not subscribed yet, please make sure to be subscribed. But anyways, I am a shareholder of both Tesla and NIO. However, I have changed my shareholdership for Tesla in specific. That's something that I communicated with my patrons. I don't talk about that here on a public channel usually, but I have to say that I have gotten a bit more worried about Tesla's current valuation as well as the fundamentals since quite some time actually. And it's now showing up in the Tesla earnings. So in the last earnings, we've seen one metric that I want to talk about now is the automotive gross margin, or some call it the vehicle margin. It's basically the price where you sell the car minus the cost that it's costing you to actually produce that car. So what's left of that in relation as a percentage, that's the vehicle margin. The more you have as a vehicle margin and the absolute amount that you have getting out of that, you can use that in order to pay everything else when it comes to R&D, when it comes to marketing, when it comes to other spending, okay? So that's the metric that we're comparing here. And so this chart here that I'd like to show you is made by Troy Teslike, an account on X. That is also a quite neutral observer on Tesla in specific, on the automotive industry. And you can see here the Tesla gross margins, which in this case are the vehicle margins, and they are excluding regulatory credits. That's very important to note, because Tesla obviously also get revenues coming from selling vehicle credits, and we want to be really transparent here and accurate to only report vehicle revenues minus what it really costs to produce that vehicle, because that's the accurate number there. Because obviously with sales of vehicle credits, that's looking much better. But now this number has arrived to 13.6%, right? So it's been trending down over some time, and it's showing me that Tesla is, with the reduction in the vehicle average sales prices that they're making, under pressure, maybe by competition, but also maybe on macroeconomic factors. For example, with the interest rates rising or less demand for EVs currently in Europe, for example, stuff like that all pays into that. The prices of the cars are coming down faster than also the improvements that they're making on the cost side, which they are making, which is impressive, right? They are making it cheaper and cheaper to produce those cars. However, the average prices which they are selling the cars at are actually coming down further. That's why we get this deterioration in vehicle margin. And now if we compare that with NIO, obviously, because I'm invested in that as well, and NIO's received quite a lot of criticism in the past when it comes to their profitability. But you can see since Q2 2023, there's actually the opposite effect happening, and we see a slight uptrend in this very same metric. So we've now arrived. So previously it was really down, right? It was down to almost 0% of a vehicle margin. Means it cost them the same to produce the very car than it was sold for, meaning there was no profit even on that metric. And there was no money going towards paying off the rest of it, like R&D and such. But now it's been increasing again. NIO management, if you look at the reports, has claimed stuff like lithium prices, scale, and transformation to new platforms, and so on, as some of the reasons. And to be honest, like looking into the future, it's expected that this number keeps on growing. That's what they've guided for. They've guided to 15 to 25% in ideal cases when everything is ramping up, and even for other models like Envoy as well, right? So this is a very, very important metric to watch, because not only does it give you the future of where the company is headed, but also it's kind of, telling you a lot about the branding and the pricing power in the market, and it seems that NIO has recovered on this metric, while I've also told you in the last couple of videos that the average sales prices of NIO also have come down over time, but are now kind of finding a bottom there. They might be on a NIO company level go down a little bit more in the future, because we now have cheaper models like Onvo, and in the future also Firefly, which will make up a bigger chunk of the whole picture of the company. The NIO brand itself will have lower volumes than Onvo in the future, and then Firefly maybe as well. So the average sales price of the whole group might come down further, but so will also the cost. And so like the cost to produce these vehicles. And so these margins, the vehicle margins, should be at least trending the same, or go up over time. There might be zigzags, sometimes might be misses, or that the vehicle margins are coming down a little bit, but overall they should be growing for NIO. Whereas for Tesla, we've got the exact opposite image, that it's going down. And you have to say that the average sales prices by Tesla are here helped a bit. I also did another little napkin calculation here, like the ASPs ex credits reported by NIO are around 39,000. Same for Tesla, slightly higher, 39,800, so $600 difference in the ASPs on a global level, right? So Tesla in China will be sold much, much cheaper than NIO cars. So, but Tesla still has huge volumes in Europe and in the US on top, where you get the Teslas not at the same prices than you get them in China. So you need to note that NIO is still positioned higher overall than Tesla, although that may become closer and closer in China over time once Onvo and Firefly take a bigger chunk of that, right? But currently, that's what's reported in the last earnings. And now the auto margins, ex credits, are really arriving at the same point here. NIO 13%, Tesla 13.6%. And that results in a profit per car sold of round about $5,000 for each of them. So for NIO, it's $5,143, and for Tesla, $5,415. So, and the trend is your friend, right? For NIO, that number is kind of improving, while for Tesla, it's going down. This is really something to consider. Obviously, Tesla has the higher volumes currently still, so they are selling many more cars that each make $5,500 on profits and help them to pay for everything else. But NIO is expected to grow, and they are in fact growing 40% year over year, while Tesla is currently stagnating. And people like Troy Tesla are actually expecting them to stagnate in 2025 again, meaning same delivery numbers. I'm not going to say that this is exactly what's going to happen, because Tesla, I think that's also why there's excitement currently after the earnings, has guided actually that they will bring out new models that will help growth and also pull forward some of those expectations. But you have to be really neutral here in analyzing that and say that on this unit economic metric, NIO and Tesla are currently the same in terms of profitability. And it's begging the question to ask, like, where is the manufacturing advantage by Tesla here? If they're the same, then NIO, and NIO is at lower scale. Something to think about. I don't want to be overly bearish Tesla here and overly excited NIO. Just want to point those facts out, because obviously usually lots of people coming in the comment section and say, oh, you can't compare NIO and Tesla because Tesla is profitable and NIO is losing money. Yes, but that's also a little bit about where the companies are currently in their lifetime and where they are in scale. Reading those trends forward, actually this might change, and we have also to note that currently Tesla only on the bottom line makes the profit then by the fact that they also additionally get the vehicle credits, the carbon credits, plus they had a markup for Bitcoin because of some accounting rules changing. So if that weren't the case, there wouldn't be that much of a profit either. Anyways, that's it for now. Thanks for watching.